Welcome to Deal Flow. Ryan Ray here. First episode with the man I've known for almost a year now, I guess. Josh, we've known each other for about a year now. Good to have you on the inaugural show. Maybe do a quick 30-second introduction of who you are, what you do, and then we'll get into it.
Yeah, sure. Ryan, thanks for having me. And I think you're right. It's been maybe a little over a year now. And I am the co-founder of a real estate investment company called Ocotillo Capital Partners. We are developers of Class A industrial space on the Texas-Mexico border and also in the Central Texas region. But we also buy existing assets and do some land entitlement work with a geographic focus on the Austin San Antonio MSAs and then the Texas border.
All right. So let's unpack Class A. What does that mean for people who aren't familiar with that term?
Yeah, that means sort of brand new construction of tilt wall buildings. Typically, you're going to have at least 28-foot clear. I mean, that's trending up where we are. The sub we're building right now is 36-foot clear. You're going to have ample truck court parking, so a lot of extra staging. Our truck courts are 180 feet wide. We do a rear load product is what we're building right now. So there's kind of employee or worker parking on the front side of the building, as well as kind of a little bit of a retail feel to that entrance that gives it an office vibe. And then the docks are on the back. So those are the big things I'd consider. And like really like the quality of the finish is an important part where you're just thinking about driving a bunch of power operated forklifts around all day.
Okay. And if I were to get on Twitter right now, Twitter would tell me the sky's falling, commercial real estate crash is coming, and yet you're going after Class A stuff, which sounds to be on the top end. You're not going after the slums. So why that? Why now?
Yeah, well, I guess we do two different things, right? So we build the market that we're building in is one where the supply and demand imbalance is pretty high. So there's functionally 0% vacancy of this kind of Class A space that we're talking about. And we just delivered one of these buildings that is almost fully leased now. Hopefully have it fully inked and 100% leased the next week or so here, and have requirements for above that on kind of on our radar. No one else is building in that market. So and then I think question about like Class A today, if someone's capital structure is in a bad spot and their building is vacant, let's say in San Antonio or Austin, and they're on a construction loan, like they might be incentivized to just sell something now so that they can get off a personal guarantee or get off that construction loan and maybe just return equity and pay down the debt that they have, rather than kind of continue to incur carry costs. And that's really deal specific. I think a lot of the people that do that kind of development are really well capitalized, and you're not necessarily going to see a ton of opportunity in that space. But for the existing single tenant stuff that you and I've worked on a lot, where maybe it's a sale leaseback or maybe it's a vacant building, we really try to target stuff that is well located, that needs some meaningful level of capital investment, or where my my purchase price is going to be more attractive than the type of bank financing they could get if they were trying to refinance it with their business as the tenant.
Yeah, that's what makes it hard, it seems, when you look at, whether it's buying a business, commercial real estate, whatever it might be, is the tendency to flatten out everyone's situation, right? So there's going to be people who have good situations, bad situations, the unicorns. So you have to start with kind of a thesis, and then you got to find people who fit that thesis. So you also mentioned the Texas-Mexico border. What also got you interested there? Because that's another spot. If you were to turn on the news, they'd say, "Oh man, you don't want to go here," and so you guys are saying, "No, no, no, we want to go here."
Yeah, I mean, there's a couple different pieces there. I think one of them is that the USMCA, which is kind of the re-up of NAFTA, I don't think is fully appreciated by a lot of individuals. The level to which existing supply chains and auto parts and like some small manufacturing and then small electronics kind of was already in place and some to some degree, and is now, if you want to qualify for tariffs that make that stuff kind of duty free or tariff free, you have to have a much higher threshold of your product built in Canada, the US, or in Mexico. And so what we're seeing is a lot of people adding on to their existing supply chain and expanding that, so that a part that might have been built in Vietnam or in China, and then shipped over, is now getting built in northern Mexico. And that threshold sort of is continuing to ratchet up. Another piece about that that's interesting is like during the first Trump administration, the discourse between the two countries prior to getting the USMCA done really sort of gave a lot of people pause about doing work down there. But again, there's already a lot of supply chain there. It's growing right now because of some stuff that has changed, which is why we're really interested in it. But it was already there, and so I think we just feel like it's underserved from a developer standpoint, and is going to continue to grow for a lot of different reasons that some of them are pretty political, but some of them are also just demographic. Like that part of South Texas, that part of northern Mexico has a lot of its own ecosystem kind of building already. There's obviously challenges both with immigration and with kind of crime particularly on the Mexico side, but I think a lot of that gets sensationalized in the media as well. If you go down there and spend time in McAllen or Farr or Laredo or Brownsville or El Paso, it's not going to match what you might imagine if you're just watching Fox News or CNN.
It's interesting because I was thinking about that, I guess this morning or yesterday, about if you think about a rough area, you go, man, no one would live there, and yet people live there and they work there, and you go, well, they can't get out. It's like, well, no, some people could get out. Some people just choose different lifestyle. It kind of goes back to that thing I said a minute ago. It seems when you're looking at generating deals or trying to get a thesis and understand it, it's really hard to step outside of what you might do,
Yeah.
and then figure out what someone else might do, and then how do you capitalize and make a deal happen in that space.
Well, yeah, and to your point, I don't think you can flatten everyone's situation. We feel like understanding what a property owner that we're trying to work with is interested in achieving is one of the things that can help us lead to better outcomes. But frankly, it's also like there's a little bit of friction between like developing like a very clear process where this is what this is how you analyze something and this is what you'll do, versus looking at anything that looks interesting within the scope and then kind of trying to make it work with that individual or idiosyncratic owner. I think what we've tried to give ourselves guardrails around so that we can make that manageable is within a product type, within a geography, and with a couple of size constraints. And so then we've sort of defined the pool of opportunities that we have a view on, and then we can kind of look at each one of those individual things that we've kind of it's past this initial screening, and now we can talk to the individual owner to see if there's a way to maybe do something creative.
And do you see yourself in this same part of commercial real estate 5 years, 10 years from now, or is this a I say short-term thesis, short-term thesis that you go, now is the time, or do you go, no, 20, 30, 40 years from now, this is where we want to be?
Yeah, I mean, I think we'll be in this for the rest of our careers. I think the way that Nick, my business partner, and I have thought about it is that this is a meaningful long-term structural trend and change. Specifically, there's going to be continued manufacturing in Central and South Texas. The demographics in those places are going to continue to expand with the population and having a young working populace that makes it competitive for those types of relocations and expansions and kind of new companies. It's possible that we'll expand into other stuff other than what we do right now, but I do think that this is kind of a cornerstone of what we're focused on for the next 25 years.
And so why then Texas? I talked to you a few weeks ago. I said, "Hey, what about Florida?" And you said, "No, I don't want Florida."
Yeah.
At least then, why is Texas so unique?
Um, Man, that's a big long question to try to answer quickly, but I will say, I think at a high level, like we feel like Texas is where a lot of different people can still really achieve kind of like the quote unquote American dream. I think you can live a really high quality life. You can own your house. You can, find ample opportunity for employment if you're willing to work hard. And being in Texas, like I spent a lot of time on the West Coast. I've spent a lot of time in the Northeast. I'm talking to you from Brooklyn right now. It's a people want to do work and people want to work with you in Texas, pretty much regardless of creed or race or religion. It's just if you're pretty upfront and hardworking in Texas, people want to work. So I think that aspect of it, we think, gives it kind of a special sauce. And not that there aren't other places in the U.S. that have that, but we also have to give ourselves constraints and think about where we have, where we have advantages and can be really focused.
Yeah, and I don't know. I lived in Louisiana growing up, and I've been in Texas for almost 7 years now. I lived here a year after I first got married. The thing that I've noticed is that when I was where I came from, talking about entrepreneurial ideas or whatever wasn't necessarily encouraged the same way it is in Texas. In Texas, you go, "Hey, I want to do this," and almost always they go, either I've done that or my buddy's done that or my cousin's done that, and it just kind of feels a lot more like, "Hey, let's go get it." We lived in a neighborhood. We moved over here. There was 150 private planes in the neighborhood. Now I'm not no millionaire. Like it was just there's 100. They had 100 houses with airport or hangars and 150 private planes in this neighborhood. It was mainly retirement people.
Yeah,
There,
yeah,
there wasn't 150 people in Northeast Louisiana that own planes, But it goes to that mindset, and that really impacts the culture more than people think about.
totally, totally, and I guess also, some places it's nice to be able to get away from and get back to easily as well, right? So.
Yeah, but I mean, just to have the mindset to buy a plane is just. My uncle had one, but he was the only guy I knew that had one. I think back there. So, anyways, it's just there was a different mindset. And then to your point about living, what my Amber Alert's going off here. Sorry. Up to your point about living is there is a substantial cost of living that's where I'm at, just south of Fort Worth, that's going up. But relative to like LA and probably where you're at in Brooklyn, it's still a lot cheaper, it seems. So, and there's a lot of space down here, obviously in Texas. So, I guess part of your thesis is that there's a lot of room to grow for people to move further
Yeah,
out.
yeah, and I think so. I've been fortunate to work in a bunch of different markets. Like I've done stuff in Atlanta, I've done stuff in Seattle and Portland. I've worked in the Carolinas and Florida and Nashville. I think one of the things about San Antonio and Austin in particular is like it's those two markets are still really geographically like relatively small compared to like the other cities in the top 15 or top 20 MSAs that they get compared to. There's a lot of room for those cities to just have an internal growth that has really little to do with a lot of outside stuff and just people coming there and starting localized businesses. And then you factor in on top of that some of the national range that the region has for tech employment and manufacturing employment, and it starts to just be kind of in our mind one of the more compelling or most compelling kind of regions to be focused on for the next 20-25 years. So
You mentioned political stuff. Does that factor in? Do you get concerned again? Going back to kind of the Twitter sphere, you see like, oh, this guy wins, this person wins. Does that keep you up at night? What keeps you up at night? Maybe a better way to ask that, as far as where you're at in the real estate space.
man, like actively building a building right now, like construction accidents keep me up at night. It's something
I bet.
like that. That's the first thing that comes to mind. I don't, we want the folks we work with to be safe. I've built a lot of multifamily in my career, and when I was doing that, and like their apartment fire happened with a wood frame building or something like that. That's I think that's kind of the worst nightmare to think about. We're not building anything like that right now, but I don't know if you've seen someone like tilt up a concrete tilt wall, but there's a moment there that's terrifying. And so like that's kind of the first thing that comes to my mind. There is we watch interest rates and we watch cap rates and we watch stuff like that. We think we've made some decisions and try to make decisions that can be good regardless of the direction that those go. But we're certainly not immune to those things. So I think that's the thing that we think about. When I was when I was in Texas, I think I was considered relatively liberal. When I've lived everywhere else on the coast, I think I've been considered pretty conservative. So I don't, I think there's bad stuff about both parties, and we've got a lot of work to do from that political spectrum. But I think I'm encouraged by I'm encouraged by Texas's like the people of Texas and the willingness to like at a local level try to find elegant solutions. So I don't know that keeps me up at night so much as it's also one of those things that I don't have any control over. So I'm trying to insulate myself from that as much as possible and make decisions that won't be impacted by that, and unless everything's impacted by that.
Right. It's interesting because it is, like go back to COVID, there's literally nothing anyone could have done to change anything about that. And it came and it happened. Like, and you could have predicted in 2018 the world was going to shut down. But you could have worried about something like that in 2018, and it would have done you no good, really, because you would have known, and so there is something to the mindset of to get things done, to move forward. You can turn on Fox or CNN or whatever it is, or Twitter, and get caught up in all the hysteria. And then if you were to probably track all the things that are wrong, people predict are going to happen, and how much progress you could have made if you just focus on that, you'd probably be a lot better off.
Yeah, totally. I think that just staying focused on like the decisions on the things that we've made a decision to focus on and like grind on that and not get kind of shiny object syndrome is one of my personal challenges, because I'm interested in a lot of different stuff. So I'm like, oh, this seems interesting. Like, why shouldn't we go try to buy offices in San Francisco? Because there's probably really good opportunity there right now, right? But like that, we don't have the same edge or the insight that we think we do in San Francisco, that we do in Texas. So don't spend time doing
it. 5 years from now, we're talking about commercial real estate. What's happened? What's changed? What are we saying?
I think a lot of syndicators in the multifamily space and some of the industrial space don't exist anymore. The way that folks could underwrite bridge loans and some of the stuff that happened or has happened there, I think it's gonna be kind of a continual slow bleed, and I think it'll probably be a lot worse the first part of next year than it has been elsewise. I think that's I've personally heard about some different people that are different, I should say, firms that are in really kind of upside down positions and are trying to figure out how to either sell assets to pay down the debt that they have and just get out, or get foreclosed on or get recapped. If you're getting recapped, you're basically getting kind of a hope note. Someone's coming in and recapping and taking over management maybe, and like you have some back end if things go just like swimmingly. Maybe you see a check at the end of the day, but you're not insolvent theoretically. You've kind of preserved or kicked the can down the road. But I don't. I think that'll have changed a lot. I think when I first started, I got into real estate in 2010. So I wasn't old enough to see things crash really from 06, 07, or wasn't aware of it. Certainly old enough to have been paying better attention than I did. But I think when I learned how to underwrite everything, cap rate expansion was baked into an underwriting, like the types of assumptions that you made I think were a lot more conservative than the folks that had been able to buy stuff in the last 3 to 5 years. I think there's going to be a greater kind of greater margin of safety implemented into most buyers' underwritings again. Maybe not everybody, but that seems likely. I guess that's also predicated on rates staying higher, right? Because if rates drop again, people will probably get aggressive again.
Yeah. So, I mean, it sounds like maybe there's going to be, I don't want to put times on it, but almost a feeding frenzy on some of these deals that are going to go belly up, or the potential for that. And then things will level off. Is that kind of what you're thinking?
Yeah, I mean,
Depends on how many people go belly up, obviously. But if there's a lot of blood in the water, there's going to be a lot of deals scooped up or changed hands potentially.
Yeah, I think that's true. But I think it's likely to be in bulk. And it's also like I think there's a handful of people, a handful of firms in every different market that's going to get an opportunity to go look at stuff. Some of those are like the largest firms that'll just, go recap a bridge lender or something and take over a bunch of stuff. Like it's going to be, I think the other thing is like a lot of like one-off groups and owners are fine. Like they're just going to hold, so it's hard to say there's going to be like a total feeding frenzy, because at some level there has to be like a forcing mechanism for that. But yeah, I think you'll continue to have like very limited activity, then a flurry of activity, and then to your point, sort of some leveling off.
Yeah. You said you got in 2010. What's the one thing you wish you would have known back then? You couldn't have possibly known, but you know now.
Oh man, a lot of things. I guess that cap rates would compress, 250 to 300 bips from like 2015 to 2020. I would have made some different decisions, but yeah, I mean that. I have a really specific memory of underwriting a deal near the Domain in Austin, and the basis we were going to buy it at, and it was long term, had kind of an option on some redevelopment, and I think we got second or third of the best and final, and didn't kind of step up to go hard on our earnest money deposit day one, and that deal has been an absolute home run for the people that bought it when we were looking at it. And there's a whole lot of things they couldn't have known, but like at the same time, we had an opportunity to buy really great real estate right next to the Domain at a price that we felt pretty happy about, and what it would have cost us to stretch, probably would have made a difference on the deal either way. So I think that's one thing that, when you get those opportunities and you think you have a lot of things that are structurally right, but you're saying, well, I have to get this 15 IRR, maybe be a little bit more honest with yourself about like, if you're at a 13, is that the end of the world, but
who in your space of commercial real estate does it better than you, that you look up to, that you follow? That we can go follow. Like, hey,
we're not in the exact same space, but like the Fort Capital team guys, I'm lucky to call Chris a friend, and I think the guy's just built an incredible team of people over there, and I think just has had a lot of vision that not many people have had to build what he has. So that's definitely something. I have a lot of admiration for folks that have built firms that I've like bumped into. So Stone Lake Capital, Riverside Resources are two firms in Central Texas that I think have done amazing work. The Endeavor guys, I don't compete with the Endeavor guys or Stone Lake or Riverside, to be very clear. They're not my peers. They're kind of much ahead of me in company building. But I admire what they've done. Yeah. I'm trying to think I think some of those people are obviously Chris is on Twitter.
Yeah.
Trying to think of who else might
Yeah.
be. Pretty sure one of the guys that's pretty avid Stone Lake is on Twitter. He doesn't tweet a ton, but he's out there.
Okay. What are you currently working on? How can people find you, and what's next after your current project?
We're currently working on buying stuff in Laredo. So if anyone has buildings they want to sell in Laredo, or buildings that are companies that own buildings they want to sell in Laredo, we're looking at everything in Laredo that we can right now. We are working on some land stuff there, working on some land stuff in San Antonio as well for industrial in Central Texas. So I mean, kind of, you know our verticals of the land stuff, the kind of value add single tenant industrial stuff, and then the class A industrial stuff. So continuing to do all those things in Central and South Texas. We've got a website that's ocotillo.cap.com. Our contact info is on there. If people want to reach out, feel free to. And then I'm at Texas Donut on Twitter. So
It's a great handle.
thanks.
Josh, well, listen, it's been great getting you on, and I'm sure we'll be talking real soon.
Appreciate it, Ryan. Have a good one.